I've probably said I spent well over 10,000 hours when it comes to mastering ICT and SSC concepts, and in this video I'm going to break down the exact steps that I look for on a consistent day-by-day basis that makes me well over 6 figures a year. And if you're a struggling or beginner trader watching this video, I urge you to watch till the end, as I'm about to give you guys a lot of value that's going to prevent you from making a lot of costly mistakes that I see a lot of beginners making, as well as I want to help you along your journey to helping you make your first $10,000 or just reaching your first payout. So before we begin, make sure you guys click the like button, subscribe if you're new to my channel. I'm Arkham, and if you guys want to be mentored and trade live with me every single morning, you guys can just click the first in the description and become a student. Now, let's get into the video. The chart we're going to be looking over is the S&P 500, and as you can see, this is today's executions. The morning session was a little bit choppy, but we did come back with the PM session, and I was able to catch this nice PM session short, reaching all the way back below these lows, making me a little over $1,700 on the day. Before we can break this trade down on the lower time frames, we have to start off on the higher time frames. Let's get up to the daily. When it comes to trading on the daily time frames, we want to keep it pretty simple. Obviously, we want to take note of our previous day highs as well as our previous day lows. These are generally areas of liquidity that price tends to come back into more often than not. So on the daily time frame, you always want to pay attention to these specific levels. But on the daily, we're not really getting much information. We can obviously see here that price has been in an overall consolidation, going back and forth within this range. My overall emphasis this morning, if I'm gonna be honest with you, was I was anticipating higher prices, right? When we were opening up this morning, price was back up here. If I know prices are usually going to come back up into a previous day highs or the previous day lows, my main emphasis would be, would we see a overall reaction higher to come back into these previous day highs, right? So that was my main emphasis this morning. I wasn't necessarily bearish, but towards the PM session and I gained additional information, I was able to reverse my overall idea, and I'll explain that later on. But for now, on the daily time frame, the only thing that we're going to mark out at the moment is just the previous day highs and lows as key areas of liquidity that you always want to take note of. On the 4-hour time frames, I get a little bit more information. My right here is an indicator that displays me my higher time frame. So this is the day time frame here to my right, which the indicator is called ICT HCF candles by Fadi. So obviously I always have a visual representation of my higher time frame candles, but for the most part, coming into the 4-hour time frames, right, too many people try to confuse top-down analysis. I'm gonna simplify it in a way that's very, very simple, right? We obviously have our previous day highs above us, and then we have our previous daily lows, right? On the 4-hour time frame, we're simply just marking out key potential areas of support or resistance. So a key level that we can take note of is this 4-hour bearish for VAG gap. So obviously we have this 4-hour bearish for VAG gap as a potential level of resistance that price could potentially come back up into to find resistance to go lower, as well as this key 4-hour bullish for VAG gap. So obviously this was a level of resistance, and now below us we have a level of support. Basically, other than that, we're not really getting much else information. We can obviously see here that price has been in an overall downtrend, which it did break back below this bullish for VAG gap, which is very, very important. If you guys watch my YouTube video, how to identify daily bias using fair VAG gaps, when price closes back below this bullish fair VAG gap here and then inverses it, this could tell us an idea that the market is currently bearish, because price should have potentially found support at this level. But the fact that price broke back below it could mean that price could be leaning more so lower prices. So obviously within this overall example, we can see that price is at level of support, but we also do have multiple indications that we do have level of resistance above us. So at this particular moment, we don't really have a 100% bias between higher and lower prices, but we do mark out our potential key support and resistance zones. So now I'm going to go down to the 1-hour time frames to get additional information. The 1-hour time frame, we can take note of some key things. So we can obviously identify this Asia range between 8 p.m. to 12 a.m. EST, right? 8 p.m. to 12 a.m. EST is the Asia range, and this is an algorithmic level inside the marketplace that price tends to come back up into. So obviously we can see here that price came lower to take out these Asia session lows. But if we look above us, these Asia session highs are intact, meaning that price has not yet come back up into that level. As well as above those Asia session highs, we can take note of this fair value gap. So we're simply just marking out our key levels of support and resistance and anticipating price to come into those levels. And once they're at those levels, you can then reassess based upon that information on the lower time frames. If that was confusing to you, don't worry, we're going to break it down even more. My overall emphasis this morning is, after we swept these areas of liquidity, is price going to find a level of support to reach back above these high points, above these Asia session highs, that fair value gap, and potentially back up into those previous daily highs. That was my overall emphasis and what I was looking for this morning, right? As well as, even though I was anticipating higher prices to reach back up into those previous daily highs, you have to also be aware of a counterpart. So the counterpart would be price could also come back up in here to find a level of resistance inside of this bearish fair value gap to see that resistance to go lower. That is also a potential setup that can take place. So basically, when it comes to creating a day bias, it's very, very simple. Where have we been? Where are we currently at? And where do we anticipate price to go next? We've been going lower and lower within the markets, breaking structure. We are currently down here and we have a level of resistance above us. A high probability scenario could happen is if price opened up, gave a manipulation higher into this fair value gap to find a level of resistance to go lower. That is a high probability scenario that could potentially happen. So as the market opens up here within 9:30, I kept this in mind just in case. So I'm going to go down to the 15 minutes time frame here, and I'm going to break down today's trade setup that I caught with the live trading team. 9:30 is just about to open up here within the next 15-minute candlestick. So usually 30 minutes before the market opens, I create a daily bias with the trading team every single morning. My overall daily bias this morning was we did have these equal lows below us. So you always want to take note of equal lows as areas of potential liquidity within the markets. So we have these equal lows below us, as well as we do still have those Asia session highs. So my main emphasis was, if I can catch longs at this specific level, we could potentially reach back up into these Asia session highs, as well as this bearish fair value gap. That was my overall emphasis this morning, seeing longs reaching back up into this level. If price was going to hold within this level, meaning it came up into this fair value gap and it found support to go higher, this would be a great scenario to then take longs to reaching back up into those previous steady highs, right? Remember, price tends to take out previous day highs and lows usually 80 to 90% of the time. So if I can see price break back above this bearish fair value gap and hold within it, I can frame longs reaching back above this level. But if price comes back inside of this fair value gap and instead of breaking above it, it starts to reject and go lower, then this could give me an emphasis that currently price is not bullish and we could see lower prices reaching back below these equal lows. So when it comes to creating a daily bias, you always want to create a if then scenario. If this happens, I'm going to do this, but if that happens, I'm going to do that. So whenever you're coming into markets, never have one-sided way of looking at the markets, have different positions to where just in case one doesn't work out, you already have another idea planning. So I'm going to break down the exact setup that we're looking for this morning, then what I look for in the afternoon. Kind of consolidate here, so I kind of avoid this. And then after that consolidation, we see this break to the upside. So I was able to frame my long here on a pullback around this level. I had my stop loss back down here. And the reason why my first entry was like this was because we could see here that price before 9:30 opened up came down within this 15-minute fair value gap. So my emphasis this morning at 9:30 was, okay, we came down into this 15-minute fair value gap. Potentially price could have found support within this level, and then as 9:30 opens up, we could see a breakout to the upside, reaching back above those higher prices. So that was the overall emphasis that I was looking at, right? When price taps into a level of support and then breaks above it, basically running away from it, price tends to not come back within that level. So once we tapped into this 15-minute fair value gap, and then we see this break away from it, right, the strong bullish engulfing candlestick, I can frame my long setup within this level, and as long as my stop loss is back below this low, I know that price cannot come back down here. So this was the main emphasis that I was looking for. I was simply just targeting back above these higher prices here. Good risk management thing that I do is my first trade always includes low risk. So I start off with low risk and a bigger stop size. And as price goes into my favor, I scale into my position and then I adjust my stop loss even tighter. So in this case scenario, as price came lower, tagged me in, and then went higher, I scaled in and I adjusted my stop loss. And then as price kind of like came back on me here, rejections here, and then seeing that push higher, I was able to scale in for another time, basically around the same entry, and had my stop loss just back down there. Came back up into that original high point, took it out, and then it kind of rejected from it. Okay, so that's interesting. And then from then, it kind of came down lower, gave this rejection from it, and started pushing higher. So I was anticipating, okay, we opened up, we saw this rally higher, it gave this pullback, we saw another rally higher to take out this original low. Maybe this could be the move to reach back above those higher prices. So that was I was looking for. And then as price kind of consolidates here, and then we see this push higher, I was able to scale in for a last time, adjusting my new stop loss just back below this low. Basically, as price kind of goes into my favor and I can be confident within this trade, I can add to this position and I can trail my stop loss, meaning that as price comes into my take profit, I end up making a lot more on the trade. But since I'm trailing my stop loss with the scale in, I end up risking the exact same amount. This is how I'm able to have a consistent 3 to 4 arm multiple with over a 40% win rate, which is very, very profitable every single week. Is because of my proper scale in technique that I teach all of my students. So as we can see here, price kind of still consolidates, right? When price gave this push higher, I was anticipating that to be kind of like the final push higher there, but then it came back lower once again. And as it came back lower once again right here, I was able to take the position off. When the market is in a consolidation like this, where it's just not going in your favor, and by this point it was consolidated for the last 2.5 hours, you always want to take position off. Even though price could still find support to push higher to take out this original high, and it could have worked out, the chances of that happening is the same chances that price would have came lower and taken you out, and it would have failed. So you never want to be trading in an environment to where you feel like you're gambling or it's 50-50. Whenever I'm trading, I want to be in an environment to where I'm confident. I know it's going to go higher. I know it's going to go lower. I'm very confident in the trade and am never put in a position to where I ever have to over worry or stress about the trade at all. That's the type of environment that you need to be training in on a consistent day-by-day basis. And if it's not giving you that, the best thing that you can do is cut the loss short or take it off at break even and preserve that capital for a better opportunity that comes later on. If you want to become a full-time trader and make your first $10,000 or $100,000 trading, this is the type of strategies that you need to use when it comes to utilizing proper risk management and overall psychology. So we were able to take the trade off there, basically break even. So we took the trade off here and I came back into the PM session around 12:40. Basically the PM session starts around 1 o'clock going into 4. Around 12:30 I create my daily bias and what I'm looking for. Being into the markets around 12:45, 12:50, I was able to spot this signature right here. You can see that price opened up, it came higher, and then we saw this drop to the downside. With this exact signature, I was able to take my short setup and adjust my stop loss just back above this high point. And the reason why I was able to take this short setup is because of a multitude of things, right? First of all, we're still within that 1 hour fair value gap, right? If you remember that 1 hour fair value gap right here, plus that 4 hour fair value gap, price is still within this level, as well as we came higher to take out this area of liquidity, which was those Asia session highs. We talked about that. When price took out these Asia session highs and then tapped into this level of resistance, this was a point that price could no longer continue going higher. Price came higher here, struggled, went lower. It came higher again, struggled, went lower. It came higher for a third time, struggled, and it could not break above it. This means that there is a potential strong seller within this specific level that is not allowing price to go higher, right? Kind of like a ceiling. You keep jumping over a ceiling, you're not able to break above the ceiling. Instead, once price sees this strong displacement in the opposing direction, I can now change my bias from, okay, I was anticipating potential higher prices to reach back into these previous day highs. But the fact that price is not coming back up there and is not breaking back above this level, which is within a resistance, I can change my overall narrative from higher prices to now lower prices. So we can obviously see we have this original low right here. as well as we do have areas of liquidity below it, like these equal lows right there, what I told you earlier. So this was the exact setup. I remember my take profit was just 5 points below here, so around this level. So this was the exact setup that I took for over a 2.7R, which I was able to immediately scale into the position. And you can see here, price kind of consolidated a little bit, but it eventually came all the way back down there, taking out this area of liquidity, coming all the way back down, crashing the whole thing. And the main emphasis behind this entire setup was very, very simple. We identified our potential zones. Initially, we wanted to see higher prices within this fair value gap to see higher prices coming back up into those previous day highs. But we were aware that there was a level of liquidity. When price was consolidating within this range, we took the trade off, right? Because price was obviously not going to break higher here. But now when we came back into the PM session and we can see prices make an effort to break away from it, seeing a strong displacement move in the opposing direction after tapping into this resistance level, this is when we took that breakout setup, reaching back below lower prices. So keeping things pretty simple. Not always about predicting the markets or complicating it more than it should be. It's about identifying your key support and resistance zones, waiting for price to come to you, and when you get the right opportunities, maximize on those opportunities, and when price is just overall consolidating, take the trade off and preserve your overall capital. This is the exact setup that I took with the live train team that made me a little over $1,700. And if you want to trade live with me and catch setups like these every single day with me and my team, as well as access to over 100+ hours worth of trading education, courses, mentorships, and one-on-one help to help you become a much more consistently profitable trader. And the goal is to help you make your first $10,000 trading. Make sure you guys click that first in the description, join the Spark Trading University, and I'll see you inside. That'll be it for a video. I hope you guys got a lot of value from this video. Make sure you guys click that like button, subscribe if you're new to my channel, and comment what you guys want to see next. I'm your mentor, Arkhamtrades. Be safe.